Hello everyone, welcome back to Ask Traders Weekly Trade Setups. In today's video, we will be looking at the Australian dollar versus Japanese yen. But we had already two ideas previously on the Euro New Zealand dollar and New Zealand dollar Swiss franc. Let's have a look at them. Euro versus New Zealand dollar. This was the idea that we had last week, I think. And the expectancy was that the price will move towards this support. What we can see is that price did in fact reach this level, the target, downside target, and broke below one, and then it found the resistance at this area and again produced a new lower low. But perhaps this is coming to an end and there might be some strong pullback. So this idea worked pretty well. Now let's move on to New Zealand versus Swiss franc. This was the idea that we had 2 weeks ago. And here we had this breakout of the triangle and expecting this move to the upside. You can see that price really fast reached the upside target, broke above, then found the resistance near the target and started to move even higher. And yet again, a good idea that worked out perfectly. So here we go. We had a very nice rally, and also it seems that it's come to an end. In these previous two ideas, what they had in common is New Zealand dollar. We know that Australian dollar is highly correlated to the New Zealand dollar. So Australia and New Zealand dollar, they have a very good, strong correlation. And this is the reason we're looking today at the Australian versus Japanese yen. Since we had a very good rally on New Zealand dollar, and we can expect correction on both New Zealand and Australian dollar, especially considering this also very strong and quite a sharp rally to the upside. What we have here is bearish divergence, which has been formed during the past couple of days, couple of trading days, and price now starting to move actually down. I have applied here fibs to 2 points. First is the last rejection of 200 exponential moving average to this high. And the second is the last rejection of the uptrend trend line to also the same high. Why I have used this high is because price haven't actually closed above. We had a spike one, then price produced, then it failed to close above. You can see this 4 candle and yet again another spike. So for me, I consider this as the highest point because it hasn't been broken actually. And I have applied these two fibs, and you can see they both correspond to this support level at 7222. This could be the very strong support, especially considering that it corresponds to 200 exponential moving average. If we extend it, we will see that it actually goes quite in line. But at the same time, if there will be a break below this level, price might go further down. In this case, it might test 76.4 fibs at 70.25. Now this area corresponds to the previous resistance zone, where price actually rejected it twice. First time was April 30 and the second time was on the May 11th. Then price found the support at this level as well on the 22nd of May. This is actually also a very important support area. But first we need to see whether there will be a break below this support or not. So this is the idea for this week. Hope you enjoyed. Don't forget to click the like and subscribe to our channel.